All right. Good morning, everybody. Hope you all have yourselves a fantastic start to the AM here. Happy Thursday, and you're ready for what should hopefully be another successful and profitable trading day. Yesterday was a bit of a wild one, right? Lots of action, lots of challenging price action, and then when we finally got our A plus opportunity, or the trade that gave us follow through, I shouldn't call it A plus, but the trade that gave us follow through, we were able to take advantage of it, right? Build it into some good sizing and to really get a significant amount of oomph based off of that trade. We played it to the downside, right? And if we look at yesterday's now daily candle, pretty much a straight line higher here, right? Right into trend line resistance. So very, very interesting bit of PA. It certainly seems like we caught like a little bit of a counter trend move there yesterday. And we'll see if that ends up being a, I don't know, indicator, right, of things to come. What I want to stress to everyone here, right, is yesterday was a fantastic example over why judging yourself on your win rate or trying to focus and put all your energy into a high win rate strategy isn't necessarily going to make you more profitable. Haven't checked here, Mikey. Haven't checked. So really interested, right? In continuing to focus, right, on the quality of my executions, on managing my losing trades, right, for when they do inevitably happen. And once that is the case, right, to add to my winners, to focus on scaling out my P&L or closing my trades, right, as my P&L is increasing, and to really continually focus on those objectives. Yesterday's win, like $3,900 or something along those lines, right, on that trade. If I lose $300, $400, $200 a trade, that covers 15 trades, 10 trades, right? 20 trades even potentially in a row of taking losses. And that gives me so much margin for error in my decision-making processes that it is almost then next to impossible to be read as a trader, right? If all I got to do is be correct 10% of the time to now be green, if I'm green 20% of the time, 30% of the time, Powell willing 60% of the time, all of a sudden I have an edge where it's like one of those videos where you see people sharpen a knife and it like cuts through paper like it's butter. And that's why focusing on pyramiding, right? Focusing on cutting our losers quickly, focusing on trusting our strategy, not our P&L, puts us in situations, right, where it's easy to be green. Saw a few people yesterday, right, on our winning trade, not like the way that price action was behaving before it ended up breaking down without correctly identifying what a correct or incorrect behavior would have looked like, right? If you think about that 15-minute breakdown, price continued to basically just bounce inside an inside bar or inside consolidation before then breaking down. There was no bearish failure. There was no increasing bullish volume. There was no reason to think that our thesis had changed. Just different, right? Because it wasn't maybe moving right away. But on a 15-min candle, you're not expecting it to break down here right away, right? You're expecting it to break down within the next 1 or 2 candles, right? The next 15 minutes. The same way on a 3-min setup, right? Obviously, you want it to be green right away, but you're expecting it to be green within the next candle's range, right? So if you have to wait 15 minutes, right, to play out a setup here on a 15-min time frame, and that makes you nervous or that makes you anxious or that makes you stressed out, then you need to do a better job of defining what you expect price action to look like and not expecting yourself, right, to be perfect right away. And yesterday, right, our entry timing or entry price was good, right, on that trade. Okay, maybe it tested 10 points higher or something along those lines. That's fine. But we're not going to catch the top every time, right? We're not going to catch the bottom every single time. We're trying to get closer to that than not. And that's what we did there yesterday. So what I think is really important, right, for people to focus on here a little bit is defining what strength looks like before you enter a trade, right? So what does strength look like before you click submit? What does strength look like after you click submit, right? And then what does strength look like as you break down through the trade, anticipating, right, that you're going to get further follow through. So like I said, right, yesterday we got effective 9-to-1 risk reward, something along those lines on that trade that ended up kind of setting ourselves up, right, for the remainder of the day. And the only reason we were able to get that type of total return on risk is because we were obsessive over the quality of our technique, not the quantity of our P&L. And when we're judging a trade intraday based on our P&L, we're no longer thinking like rational human beings, right? We're thinking in dollars and cents. And once we start thinking that way, we start to ignore the technical elements of our trading in pursuit of relief from that anxiety of our trade. So that's what I want everyone to focus on here today, right? Focus on being technically proficient and trusting that a strong technical proficiency is going to create, yeah, David, fire away. A strong technical proficiency is going to create a strong P&L outcome, right? If we focus on those elements, we control those things, we obsess over those ideas, then price action reminds us that we've got a good amount of momentum. So, David, I mean, I will say I did close my trade yesterday as my P&L was increasing, right? I didn't close it at the first opportunity, right? I closed it once it made a significant breakdown, but then also once I saw an indication that price action was no longer behaving the way that I expected. So here was my confirmation candle, right? This 1045. This was my entry candle, right? This following candle. And then on this breakdown here under this low, once we failed, right? We did a little fake out under this breakdown and we couldn't sustain that price action, which you can see easier here, right? So once we make a lower low here on lower volume, then I'm starting to be told information that, hey, this momentum or this trade is starting to run out of momentum. Let me look for an exit. And I ended up closing my trade, right, at 261, basically on that flush towards that area. So I did close it as my P&L was increasing. So got that breakdown, high vol breakdown. Once I saw that momentum disappear on that next candle, then I started to look for reasons to get out. And the reason why I said that momentum disappears, A, we made lower lows on decreasing volume, and this candle could not close under that 271 low, right? So kind of starting to look like a fake out and starting to look like evidence that bears were no longer in control. So now having confidence that I'm probably not going to get follow through towards that 20-90-90. So let me get out and close my trade as my P&L is increasing. That's exactly what we did. Guys, pyramiding into positions is purely a math equation. So what is, you're asking yourself, right? What is my current price? Where do I want to put my stop loss, right? Where do I want to move my stop loss up? What is the current price of the security? If I buy, let's say my average price is 2161, right? I want my stop loss to be 28.90, and the current price here is 28.28. Can I buy enough contracts and keep my average price to be above, right, this middle line, right, above this yellow line, or is it below? If it's below this yellow line and I'm short, I can't add more contracts. If it's above and I can be risk-free, then I can add more contracts. So it's simply just an average price equation. And this is basics, guys. We should be able to figure this out very, very easily, right? Basic average calculation is, say I've got 2 contracts at 21.61. I want to buy 1 contract at 8.28. So it's 0.61 times 2 plus 8.28, right? 28.28 divided by 3. Is that average price higher or lower than my middle line? That's it, right? So it's just as simple as doing a average calculation, and that's literally all it is. All right, so enough of this here, right? Let's start mapping things out here. Let's prepare ourselves for what should be a profitable trading day, and let's set ourselves up, right, for a good, strong session. So first things first, right, we check the economic calendar here. We had jobless claims. We got some business inventories here today. Fine. David, but that's why I closed the trade, right? So I closed this trade because it made a lower low on decreasing volume. So that's telling me that the bearish thesis is no longer strong, and I'm anticipating that it's going to return back into the consolidation area. So I looked to close that trade, then on the next quick move lower to just get out of that position, right? So I don't understand your question anymore, because I behaved in a way anticipating that price action was no longer strong and decided to close my position as my P&L was increasing instead of waiting for it to pull back and stop me out. So it did make a new lower low, right? It just didn't make a lower low on increasing volume, and it didn't hold under that 1130 low, right? So I'm getting evidence that bears are not strong. So I'm closing that position as my P&L is increasing. Had this closed on increasing volume under that 21,275, then I would have looked to continue to hold this position for longer, because I'm getting evidence to indicate that bears are still in control. All right, guys, enough. So what's the count here on ES? If you want to rewatch that trade, right, please just go back into yesterday's stream. Talked about it all there. Explained that process after the time. So there's all the information you need is there. So yeah, 2 out of 3 here to the upside without volume at trend line resistance, right? And we're looking for ORB fake out right here at the trend line for maybe another retest there into yesterday's lows. And then we're looking for a breakdown here towards 59.80. And then maybe like that midpoint, right, 59.60-ish. Cool. And then to the upside here, right, we're looking for a retest here of this trend line and then a breakout up and over. So that's 60.20, right, as our starting point here. And then a pop towards like 60, 70 would be in play. Okay, NQ, what's the count here? Similar, not so similar to ES. Right, same type of possible trend line resistance, right? So 2 out of 3 here to the upside without volume at trend line res. And so we're looking for a breakout here towards that next point of contact on that trend line, which is 21.9. We're at 21.6 here pre-market. That's going to be our starting point here to the upside. And then go 21.7, 21.8, 21.9, yada, yada, yada. And then here to the downside, right, we're targeting a move towards 21.3 and beyond. Cool. CL, big breakout there yesterday, right, on inventories. Here today, we're starting the first day of the contract switch. So you might just stay away from this here today on roll day. All right, Apple. Increasing volume by the looks of it. So technically a 3 for 3 here to the upside. Non-outlier volume. So we're looking for a 239 breakout here or a retest of yesterday's range. And then NA here for a bear case. Now, pretty easy for us to potentially get a bear scenario here, right? Not hard for us to invalidate yesterday's volume standard, but we'll cross that bridge when we get to it. Okay, Tesla, trendline breakout, decreasing volume, gap down. So we're looking here now for continuation over 431. Right? Or we're looking for a rejection back down towards 400-ish. Okay, Microsoft 3 for 3 here to the upside. That swing trade looking really good here early. And we're looking now for a breakout over 428 or like a retest inside yesterday's range. Very similar thesis, right, to Apple. Okay, Amazon 3 for 3 here to the upside. Decent sized gap up. So we're looking for a 225 breakout, right? Or a gap fill and go. Okay, AMD, same thing. 3 for 3 here to the upside. Not as significant as a gap up. So we're looking for a 120.50 breakout. Or find support inside yesterday's range. And then NA here for a bear case. Okay, NVIDIA. 2 out of 3 here to the upside without volume. pretty big gap up, right? So we want to see either, I mean, this will be a Bollinger Band reversal setup, fill that gap to the downside. And then it's either a 139 breakout, right? Or a bearish failure and go. Okay. Meta gapping down here significantly. Strong volume, which is interesting. Still wedge consolidation. It's just the opposite of what we saw there yesterday, right? So we're looking for 600 support, right? Or eventually a wedge breakout. So and then we'll say just a wedge breakdown here. Okay, Netflix 3 for 3 here to the upside. Big gap up though, right? We want to be a little bit cautious about that. So we're looking for gap fill and go type scenario. Or a breakout over 861. And then NA here for a bear case. Okay, Google. A little bit like that Meta, right? 2 out of 3 here to the upside with volume. Big gap down. So you're looking for a 190 bounce or a breakout over yesterday's high a day. And then no real bear case here because you have that volume support. So if I'm looking or judging, right, price action here today, what's the general consensus I'm seeing across the board? Any thoughts? Yeah, a little bit of like trending price action here to the upside, right? A little bit more of a bullish narrative, but it's not exactly like mega volume bulls, right? So there's definitely some potential for us to still invalidate some of these ideas or for this to be basically just like profit taking, right? So we do have flexibility in both directions here on the index level. We don't necessarily have that same flexibility on a name by name basis. So we want to make sure that these narratives continue to remain consistent and we get a decent amount of oomph and volume to support our ideas before we do anything aggressive here today. So now that prep is out of the way, anyone have any other questions about yesterday's trading or about any of those techniques that we've talked about here? So her thesis was to play a EMA moving average breakout and waited until she saw a candle on volume breaking out above that moving average, right? So she took 2 separate trades that in total calculated to $1,100 or $1,200 of P&L. If you want to ask her about her own personal trading, you can do that. I can't speak for her in that context. Any questions about my trading specifically, guys? ORB stands for opening range breakout. It's this document, right? So the opening range here is this box, which when we visualize it on our shorter term time frames, right, is this green box. And we're looking for separation away or below that area. Any other questions, team? Any other questions? Don't let these questions linger, right? All you're going to do then is confuse yourself while you wait. And then when you try to book a one-on-one call and try to get clarification, it's going to be 15 trades ago. And you're going to get different information, right? Or a less detailed explanation. So don't waste my time. Don't waste your time. Get these questions answered properly now or forever hold your peace. Once I'm in a position, Sammy, I care about the speed of which it's moving only in one context, right? So yesterday we talked about wanting to get out of that trade on that next quick flush lower. And it was getting on that next quick flush lower once that volume had disappeared, because that then usually is an indication of capitulation. If it hasn't made a new lower low and price action is still consolidating, I can't really put any stock into it breaking or how fast it's consolidating. Because what does that mean, right? So only once I see an indication that the move has stalled or hasn't maybe moved the way that I expected, will I judge the speed at which it starts to behave. But prior to it breaking out from its range, I don't care. Anything else here, team? All right, so I'm gonna make myself a quick cup of coffee, spend just a few minutes here visualizing a successful trading day, and then we'll jump back on here in a few minutes. All right, team. So let's get ready for what should hopefully be a good trading day. All right, so that trend line resistance here so far kind of playing out, right? Is that enough for us to be chasing it to the downside yet? All right, we don't have this opening candle is just helping us create the size of the opening range, right? Now that on NQ, we've broken down under the opening range, we have a setup trigger. What we need, right, once we have a setup trigger is for it to give us strong volume and candle confirmation. We will not get that for at least 2 more minutes. So is this appropriate confirmation here on NQ? Why or why not? Right, exactly. So it's a green candle, not a red candle. It's back inside the range. And the candle looks more like a least bearish versus most bearish, right? So no confirmation. All right, so although we had a setup here to the downside, we did not get confirmation of that narrative. So it's easy for us to continue to sit on hands. Is that a strong enough candle for us to play reversal theses back to the upside? Or what is that telling us? Hey, Mikey, I was just looking at my Top Step dashboard. No issues there. It looks fine. Right? So that candle is a setup reversal candle. But again, right, fails on confirmation because it isn't strong enough volume. Yeah, I mean, I don't know if I'd call this a failure here yet. It's one candle up, one candle down, one candle up, one candle down. So I'd be careful judging that here too aggressively yet. Without looking, who can remember? Yeah, no, I know Clark. I know. Right, but that's just a setup. You want to, like, saying it failed at the psych level is maybe probably too aggressive. You don't really have evidence that it's failed here yet, right? Because there's no confirmation of volume, right? And there's no real separation away from that area. Did you sign all the forms and pay the activation fees? All right, well, just sit it out. Don't place any trades. You wouldn't have passed your evaluation if you failed the consistency rule. Right, or it would tell you in your dashboard what new P&L you have to accomplish so that it isn't 50%. Yeah, it's a fine problem to have, not a big deal. And that only applies in your evaluation stage. Yeah, the stream is full. Use the live stream link, right? There's backups. Really no tangible difference. What happens at 10 a.m. today here, team? And I was going to ask, why are we not looking at CL today? Why is there no interest in crude? Yeah, contract roll, right? So it's not going to put any energy into it. What about the roll makes it hard to trust? So if we're looking for volume confirmation, what about the contract roll makes it hard to trust? Yeah, we know that a lot of the volume that we're going to see on the contract is, artificial, like John was saying on YouTube, where it's people just switching over to the next contract versus it being a sign of momentum. So I use prop firms, top clip, and I use interactive brokers. So I use my funded futures with Tradeovate, and then Top Step X with Top Step, and then interactive brokers. Okay, how do we feel about ES now? Good, not so good. How do we feel? Right, strong candle shape, increasing outlier volume, held under low of day. Right, so that's a good setup trigger and a good confirmation. So now, right, because it's already made a lower low, we're looking to apply the aggressive entry technique. And our stop loss would be 992.75. And we're looking for a gentle pullback into that area. So far, the pullback that we've seen has been like a pretty aggressive bounce higher. So we're still going to wait, right? It moved higher faster than it has moved lower. All right, so we're waiting. Okay, fine. Now we want to see a gentle pullback, right, into 589. What happens if I don't get an entry? What do I do? Do I chase it? Do I sit on hands? Do I pass on the burden of confirmation? Do I look for another opportunity? What do I do? Yeah, I either wait it out, right? Or switch to a different time frame to see if I can get an appropriate entry timing. So I don't chase, right? I don't enter at 87.50 or 86.25. I wait till it's absolutely inside my entry zone. Right? And I refuse to chase. If the trade is strong, it'll give me more than one chance to enter. Right? So I don't have to be in a rush. Being in a rush to make money only sets you up to lose. Even now, right? Now we're getting the same type of setup here on NQ. So if I don't get this entry here on ES, now I know I can switch to NQ. And I've got the same type of scenario. Okay. So I'm going to focus on NQ here now. All right, strong candle, increasing outlier volume, third highest volume bar of the day. For now, right, okay, I'm going to have to go to the aggressive technique. So 388 stop loss on NQ. So first thing I'm doing, right, is I'm setting my stop loss price inside my order window before I do anything else, right? Stop loss first. Okay, did the same thing that ES did, right? Where it made that quick higher high. So now we're going 396 as a possible stop loss. Okay, again, not ready for us, right? Moving higher faster than it's moving lower. So again, now we reset our stop loss location, and we need to see it break down here under 379, and then a gentle pullback into that area here again. Based on a 380 entry and a 401.50 stop loss, how much are you risking? How many points? Right? 21-ish points. So that would be a one contract play if we wanted to remain under that $500 of max risk. Okay, and so now I am in a position here. Average price, 385, one contract. Stop is at 402, just rounding it up. Don't know if I like that fake out very much. Okay, last chance here. Okay, guys, I am out of this trade. Closed it at 87. All right, so why did I close it? Well, once we got our entry, we then made a lower low, and it was not able to sustain those lower lows. So if bears were strong, right, bears would have sustained that price action and continued pushing lower. So instead of taking $300 worth of risk or $400 worth of risk, I can take a $40 loss, in this case a $47 loss, and reset and very easily make this back, right? So in my notes, right, if bears were strong, they wouldn't have pulled back above entry price after making a lower low. So what am I always asking myself, right? I'm asking myself, what would a strong reaction look like post-entry? Fake out lower and then a pullback well above my entry price, right, is not a strong reaction. This is different relative to yesterday's NQ trade, right? Because on yesterday's NQ trade, we didn't make that lower low on the price action moving around, right? So it continued to consolidate inside and inside bar. On today's trade, right, it made that lower low here first and then pulled back up above, right? So that kind of looks like a failed breakout or failed breakdown. So I don't need to turn that into a max loss. I can get out, reset, and keep my mental capital. All right, and if it breaks down again here, no worries. Not the end of the world. We can just try this same thesis here on the 5-min time frame, right? And try again. Not a big deal. Everyone get that? Everyone get why it was the right decision to close that trade early? And once we get a reason, right, to indicate that our thesis or our entry timing is not correct, we don't have to be pot committed and take a max loss. So now I'm going to wait for 10 a.m. data, right, which drops in about 4 minutes. So I'll wait that out here now. Someone, I even think you asked me this question last week. I don't see historically a huge difference between getting a setup in the first 30 minutes versus the next 30-minute window versus the next 30-minute window. The distribution of results is generally relatively random there. So my objective is to trade every setup that occurs and not try to apply all these filters to try to avoid losing, right? Because I don't know. I don't know what price action is going to do at any given time. I'm playing probabilities of price action doing that thing, right? So I'd rather focus on how can I juice up my probabilities versus how can I try to avoid losses, because I can't do that. Avoiding losing altogether is impossible. Getting better at losing small is something I can control. So I'd rather put my energy and focus towards that instead of talking myself out of possible setups, because then all that's going to end up happening is I'm just gonna confuse myself over what I do when and where, what exception I apply when and where, and I'm just gonna get very frustrated with my trading. So I'd rather play the price action in front of me and focus on controlling what I can control, right, which is controlling the size of my next loss, instead of trying to play Nostradamus with the market. Okay, so we're back in business here with NQ. Right, taking that $50 loss, right? I could take 20 of those trades in a row, lose on every single one of them, and then once I catch a move once and get paid out, that's going to pay for all of that and then some, right? So I want to behave in ways where I can make my win rate irrelevant instead of trying to solve for a high win rate. The high win rate and high P&L don't necessarily correlate. Again, so we're back out looking here. Stop loss have to be 382.50, which as is, right, a little bit challenging. So you got to risk right now 32 points, right? It's a little bit punchy. So I might just not get the risk reward required to take this shot here. Okay, so I'm watching here now, right? A gentle pullback into like that 60 handle starts to get very, very interesting. Okay, and I'm back in at 368. 368.50, right? Entry target approximately low of day retest. Manage this. Come on, break down. All right, took the stop. 295.86 on that stop loss. And now, right, we're getting a possible reversal scenario. Sorry, 368. Yeah, potentially, absolutely. Now, I'd probably like to see it hold above 400, right? But yes, I would. It would be targeting probably high of day. So I've taken 2 trades here, right? Both of them are losers. 2 trades combined, right, is still more, or sorry, still less than my max loss I'm willing to accept per trade. It's a good outcome, all things considered. Which I know sounds silly, but I'm easily within 1 trade, right, of being green on the day. Okay, so now we're going to look for this 10-minute candle to maybe give me that reversal confirmation. So what do we want to see here on this 10-minute candle? It's got to hold what? Yeah, over 400 exactly. On ES, do we have that same requirement? Or do we more just care about the candle shape? Yeah, care more about the shape, right? We're not at a psychological level here on ES. Our target would be the psych level, right? Okay, so far so good here. At this point, maybe we can start to target that 2R level instead of high a day. Okay, 45 seconds to go. Good volume, right? Second highest volume of the day. I've seen shorts fail twice. Let's see if it holds. Should. If it doesn't, it'll be quite the shock. And ideally, right, we want to see the aggressive entry technique here. Because a pullback into 335 is probably a little bit scary. Right, if we're saying 400 is going to act as our area of support, we would like to see that continue to hold. So now we need to see a breakout here over 425 and then a gentle pullback so we can justify the sizing, right, to take this trade. So stop loss, right, 399.75. That pullback happening, but just a little bit too fast, right? So wait, seems like it might want to make a new low. Yep, good decision. Okay, stop now, 387. Just waiting, right? We haven't really seen that elevator up here yet. Again, now we push our stop loss to be 380. So if we're thinking objectively, is this behaving like strong bulls here on this 400 breakout, or is this behaving kind of like, for lack of a better term, fuck you price action? Yeah. So every attempt we've seen, right, for it to hold new areas of support, it has been unable to do so. So no need for us to get hyper aggressive here and to chase this. Let's say hypothetically, right, I don't place any further trades here on the day. Would that be a good day? Would that be a bad day? Why would it be a good day? Why would it be a bad day? Yeah, good day. Followed my plan, right? Manage my losers small. If I walk away down $345 on the day, approximately, pretty easy to recover that, right? No, Andrew, it's not that bad here yet today. So I want to keep stressing, right? I don't judge myself on a day-to-day basis on my P&L. That's a roller coaster that ends up being far too emotionally distressing. All right? I'm judging myself on a day-to-day basis based on my ability to follow my plan, manage my rules, and save myself money. So far, I've done a pretty good job of that, right? If I behave like that every single day, well, I'm going to make a lot more money than if I get pot committed to each idea and each trade has to be green. So no bueno here. Has anything here yet invalidated this possible 10-min setup on NQ? Or let's say in 2 minutes, could it still possibly give us an entry? Why and why not? It's not quite an inside bar, right? It did make a higher high. right? So it did break out above that confirmation candle's high. But it hasn't made a lower low, and it hasn't happened on increasing volume. So our thesis could still be in play here, especially if we can get a tight risk-reward ratio to justify taking that trade. No, because I've done nothing yet to invalidate this confirmation norm, right? So this signal is still the prevailing sentiment. It just didn't give us an appropriate entry timing. Right? So what invalidates our confirmation? Either a lower low, where that doesn't act as support, or an increasing volume standard to indicate a change in momentum. Neither of those things here have happened yet. So we could still look for that bull case scenario. So what do we need to see to then potentially trigger a new entry opportunity? Anyone? Any thoughts? So before being willing to take a trade here, what do I need to see it make a move over and then pull back towards? So I'm looking for a specific price here. Yeah, we needed to get over this red candle high, approximately 426.25. And then pull back, right, to be within 25 points of this 393. Right, and the way I describe that is to make it binary, right? So either it pulls out and breaks out over and then gives me that retracement, or it doesn't. Right now it's a doesn't, right? So when I make things binary, I can make it a lot easier to not chase those ideas and then go from there. Make sense? So the more specific I can be in defining what I'm looking for, easier it is to just sit and wait, right? Instead of, oh, this feels like the right opportunity. So now, right, our stop loss would be 381 approximately. Right? So what's 81 plus 25? Yeah, so in this case, right, it'd be 406. Right? So we need to then see a breakout over 426 and then a 20-point pullback into 406 for our entry zone. Right? So if it breaks out over this yellow line, I'd be looking then for an entry on a retest of approximately this, we'll make it a green line. Right? And then how would I want to see price pull back into that area? How would I describe that? Well, Eric, it's because I need to be within my max loss number, right? So the difference between that red line and that green line is approximately 25 points. So I don't want to see a larger risk than that because I'm unwilling to lose more than $500 per trade. So this green line, right, is the point where I can get that $500 of risk or less. So it has to be inside my risk reward zone and it has to be within my max loss restrictions. If it doesn't, then I'm not interested, right? I can't take the trade. I can't mathematically justify taking on that risk. Right? So it's always those two criteria. Is it inside my appropriate risk reward zone? Is it less risk than my max loss number or my max loss number or below? I have to answer on the affirmative in both. And so far, we're not really getting this correct reaction here yet, so it's not ready for us. It's fine. And price action hasn't really moved since 945. So again, I don't need to be too aggressive here. So for now, right, we're waiting for this period of, say, 45 minutes of consolidation to now resolve itself, right? Price action has gotten stuck. No clear indication of a daily trend. So we're going to wait it out, right? Again, is our idea dead here to the upside? And what would we need to see to now flip our bias potentially back to the downside? Yeah, break of low of day on increasing outlier volume. Right, and it's got to hold under that area. Otherwise, base assumption is a mean reversion. And then to the upside here, we're still looking to not invalidate this candle. And we're just looking for a good enough risk reward zone to justify taking that trade. So here's an interesting example. Let's say that we get a breakout here on this candle right now, right? Our current candle. Would we want to go stop loss low of this candle? Or would we want to go stop loss just the previous candle to its left? Yeah. And it's just because the difference, right, is like 1 or 2 ticks. So why not have that slightly extra larger buffer? And then wait for a little bit of a deeper pullback, right? And it's a deeper pullback by like a point. So if I'm going to be trading a setup here to the downside, I need to see a breakdown here under this previous low of day. And it needs to occur on increasing outlier volume. So this previous candle here at 10:30 is on increasing but not outlier. So no indication that I've had like a personality change from the consolidation that we've been kind of watching. Right, so the standard for confirmation, Eric, is always increasing outlier. Now, there'll be times where you can play an exception when it's like really trending markets, right? If you're having a big down day or a big up day and all that kind of stuff. But we haven't really gotten any of that type of price action here today, so there's no point to anticipate that volume is good enough when price action has been pretty stuck for a little bit. So we need, for us to get tradable action here, we need to get some sort of indication of a shift in personality. So we want to be more assertive, essentially, in what we're looking for and be too aggressive than too conservative. Yeah, I mean, if I'm going to get a breakout of consolidation here to the downside, it would need to break down through this 9:40 candle anyway. Or sorry, this 10 a.m. candle anyway. So I don't necessarily need to look through too many different time frames when I still have an active signal here on the 10 to the upside. So I don't need to switch really until I break down a lower low. Otherwise, bias is still to the upside. So once a new setup trigger occurs, i.e. a breakdown under low of day, then I can start to look through different time frames to see which one gives me confirmation first. Make sense? Okay, so again, hold above 400. Now we need to see a breakout above previous resistance, right? And then pull back for a stop loss at 398 for now. So it needs to get over, right, that yellow line. And then the difference, I don't know if I could do a pullback here. Fake out lower, but still consolidating inside that range. So I still think I need to see the aggressive technique. But the difference right between the yellow line and now this 383 area is 40 odd points, right? So we then need to see a deeper pullback again. So far, markets aren't behaving tremendously like they want to give me another opportunity. But still early, only 10:41. I'm just thinking, would I be confident with the 347 stop loss? If I would be, I may as well just go low of day, right, at 334. At least Microsoft's doing well. Been a nice little swing trade. So I'm going to start to watch this a little bit. Stop loss on a long here, 334 for now. And let's basically see if we can get a replication, right, of this price action where it's a fake out under, find support, and then bounce. So I got everything set up here, right? One contract. But hands are crossed, right? Hands are crossed until I see that fake out lower. I mean, in reality here, it would be this 2R level, right? But just because that target is so far away, I just got lazy drawing out my fibs. Because I knew, okay, anywhere is going to be an appropriate risk-reward ratio towards that zone. So I sometimes I find it just a little bit mentally easier to have that zone look smaller so I don't feel as rushed. Oh man, this winter's driving me nuts. Again, still watching here, right? We have essentially this box here, right? We've got more evidence of dip buyers defending than sellers ripping through. That's what I'm looking for here. Yeah, so makes a lower low, but then can't close under that 349 area. Or we see just like a flurry of orders defending it. So fake out is breakout, right, or breakdown without being able to hold that price. So I'm just gonna grab my water. Okay, so now we're watching here, right? Now we're watching. Not exactly an enthusiastic pullback here so far. A little bit better. Man, it's one of those days where I feel like I've got weird songs stuck in my head here. I don't know what the heck I was dreaming about last night. Okay, so let's see how this candle closes. Good close. So fake out on decreasing volume, right? Not exactly a strong indication of bearish momentum. Why can't I click submit here at this 370? What's wrong with that as an entry price? Yeah, too much risk, right? Exactly, yeah, too expensive. So if my stop loss is 334, I'm looking at a 360-ish, right, or better. And then again, if I don't get that pullback technique, right, or that pullback idea, we again look for potentially the aggressive technique on a breakout over. Well, it's not going to change where my stop loss needs to be, Jack, right? If I'm going to play this, I still want my stop loss to be low of day. So it doesn't fundamentally change anything. If I got the breakout back over that, say, 428, then yeah, we can start to switch timeframes. But for now, I still need to have that stop at low of day on this possible technique. So I have no reason to switch. So still watching here, still watching, as is about $800 worth of risk, which is a little bit too much still. Yep. Yeah, no issues with that, David. It just, you can buy market orders too, right? You can enter in on market orders too, but you want to be focusing on clicking your market order as if you're going long, right, on the downtick, and when you're going short on the uptick. That's how you're going to manage yourself to get good fills. If you're chasing price, so say if you're going long here and you click it as it's, you know, breaking out through 85, you're like, oh, this move is already happening, I got to click buy. You're going to get a fill at like 93, right, or whatever it is. So in general, I mean, you can use whatever market type you want, order type you want. And if you're happy with the risk, yeah, market order is fine, but just focus on going long on the downtick and going short on the uptick. Yeah, Patrick, I haven't had any setup since then. Well, it depends on how many contracts you're trading, David. If you're trading 1 or 2 contracts, right, it's not going to be a really significant difference. If you're trading 100 contracts or 1,000 contracts, then yeah, live trading will take you longer to get that fill. Now, when you're trading with props, it's not really something you have to worry about here too much. But when we're trading ES and NQ and CL, those are like the 3 most liquid tickers in the world. Like, they're some of the most traded assets. So pretty much at every price, you're going to have plenty of orders hanging out on the order book that you could be the beneficiary of. But like when I was trading institutionally and I was trying to buy like, I don't know, $40 million worth of Apple, that trade would take me like 6 hours to be able to get my fill. And now there were some rules I had there, right? Around how aggressively I could execute. But yeah, that would take me all day to build up that position. So people always ask, I don't know if people ask me, but why I do 3 separate execution windows. Because when I was working at Airain, you know, I would have instructions on executing for Apple, instructions for executing for JPM, instructions for Tesla, Microsoft, Amazon, right? All these tickers. And so I'd have all those order windows up and I would just be managing them all separately. So I'm kind of used to it. And so I don't feel like I need to rely on copiers when I'm not going to make any mistakes in that way. It's something I've been doing for a while anyway. I was talking to someone, one of my old coworkers actually not too long ago. I was asking him about how things are at the desk. And it's now pretty much 99% automated. So all the traders are now analysts instead of being traders. Devastating. Okay, so we're back setting up here possibly for the aggressive entry technique. Aggressive entry technique means stop loss at the high or low of my entry candle. So instead of having my stop loss here at 334, I'd have it maybe 402 or whatever the next candle pulls back to before it breaks out. So it just means, yeah, stop loss at the high or low of your entry candle. So let's see, 20 seconds to go. Oh man, I can't get the heat hot enough here today. I'm freaking freezing. Okay. Oh, whoops. Wrong button. And now we want to see how this thing pulls back, right? We don't see it pulling back too far. So for now, it'd be 417. Which means, right, I could buy a couple contracts here. Don't have to buy just one. Now we're going to look for a gentle pullback here. Okay, just wait. So now stop would be 415. Okay, looking for a gentle pullback again. Okay, and I am in 429.50. 429.50. Let's see if this thing can go. One contract. So far, so good here. Boom. All right. Let's see if this thing can keep going. So far, so good here. So far, so good. Had to really work and wait for this today. But, all right, we're in shape here all of a sudden. That should be now green on the day. Let's see if we can get through 750, or sorry, 450 on some enthusiasm. So how does everyone feel about this so far? Everyone feeling good? Okay, now we're watching this on the 3-min. What was your entry, Patrick? So, Jack, you talked about going shorter time frames. This is where we can start to look at shorter time frames, right? We entered in here on this 3-min candle. Entry is 429.50. If I can get my stop loss to be 440, maybe I can build up another contract here. Okay, that's fine. Still within your appropriate risk zone. All right, so there's $500. Let's see if this thing still got some juice left. Again, right? Losing small on our initial attempts to find the trend of the day has made it easy to be green, right? Cannot stress that enough. How important that is. How much margin of error that gives us. Right? There's literally nothing more important. Your win rate is a vanity metric. Okay, it's got a bounce here. Okay, guys, I've closed this at 438. Gonna look to potentially reset and re-enter here on this 5-min time frame. Okay, try this again. Did not like the enthusiasm of that pullback here. It's a little bit mean. That's okay. We've missed out on Bupkis. Again, could potentially try again here on this 3-min if I can get the hold above 56. Bad decision. So my notes, right? Writing bad close. No reason to have been scared by that decreasing volume fake out. But that's okay. If the trade is strong, it'll give me more than one chance to enter. I don't need to rush. Dumb, 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 dumb. Yeah, a win's a win. Okay, so again, we're going to be watching here. Maybe we can get 2 contracts on a potential next entry. So for now, 464 would be the stop loss. Again, let's see if it can act as support, make a higher high, and then go. What did we see on that last trade, right? We saw it move a little bit of a fake out lower first and then break out. So again, going to be a little bit patient here. Right? Assume the market's going to behave the same way it always has until you get a proven otherwise. So, okay, boom, there's that possible fake out. There's another one. So, good decision to have not rushed this here yet. Yeah, great decision here. Okay. So now stop it at be 447. So you guys understand why I didn't rush that entry? Does that make sense? How today's context, right, kept me on the sidelines until I saw that failure first. All right, so we're just taking the information we've gathered here so far today and use that to basically beef up our plan, right? So we paid a little bit of tuition here this morning to then protect ourselves from a future loss. Which is fine. I'm cool with that. I'm happy to view my losses like that. We have to... I'm a big believer in like positive mindset stuff. And if we can look at the positive from a losing trade and frame it in a way where we actually got a good outcome from it, it's a lot easier to accept it, right? So like in today's context, okay, losing trades I took here today showed me that, hey, I need to be patient, look for fake outs first. Once I see the fake out, then I can start to look for entries. And paying that level of tuition is fine by me. Look, I've definitely spent $350 on a night out here before. Yeah, we can still possibly look for that pullback entry here now on this 10 min on NQ again. Be a 414 stop loss. So again, just setting everything up here. So this pullback still happening a little bit too aggressively for my liking. I don't want to try to catch this falling knife here yet. Well, if I can get it close enough to this 414, then I don't need to worry about the sizing issue, right? If I'm going to play the aggressive technique, then at that point, yeah, I would need to get a deeper pullback. But right now, we're within 14 points, right, of that confirmation low. So in theory, right, it could be a tradable entry. Right, so this would be the pullback entry technique because this candle has not broken out from our 11 o'clock candle confirmation, right? So we're still fully confined here inside this bar. So very similar to the trade we took yesterday around this same time. We'd be using the pullback technique. Now it's moving a little bit too aggressively still within this candle for me to feel confident that this is the right entry. Uh, 145, what do you mean by that, David? Yeah, if you got in at 415 and your stop loss was 414, yeah, you could go 2 contracts. Okay, so now we're looking for a mean reversion here, back down towards low of day. So again, I'd be targeting low of day here. Maybe it's easier on ES. Let's see. Okay, so for now, we're still looking for the pullback technique, right? And we need 425 or better. I would say realistically, my target would be around this green line, right? See that previous area of support act as resistance for a move here to the downside. If I get the pullback, right? If. Okay, so setting it up again. On the road again. So stop loss, right? 451. And I'm looking for around 529. Sorry, 429. Okay, and I'm in at 31.25 here short. Okay, let's see if this thing can go in my direction here right away. Okay, so far so good here. So far so good. See if this thing can break. You guys understand why my entry was what it was? Now we want to see a flush here through 400. And let's get that to happen aggressively. Good, good. It just takes practice, right? I understand that it's chaos. And I'm a bit of a grumpy prick sometimes. But I'm going to do my best to try to be as transparent as I possibly can be with what I'm doing. And just talking out loud more. Okay, so let's see if this thing can keep flushing here. It's gotta die, 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 die. Okay, guys, I am out. I don't like that recovery there over 400. Close price 405.25. Again, we'll try this again, right? And that was plus 520. So we're starting to stack them up, right? We're taking a bunch of body shots here today. And if this thing breaks down, right, maybe I can get this on the 5-min, maybe the 10-min wants to give me something. But I hated the fake out there lower, under 400, and then the quick bounce higher, right? That doesn't feel like a strong bear case scenario. If I'm anticipating for this psychological zone, right, this wick area to act like a wick area, I would have expected it to have like hit a wall, right, and then break down. It didn't quite do that. So I don't like that lack of enthusiasm. So I just close it, right, reset, get impartial, and try again. And that should put everyone hopefully nicely green on the day here. Good entry on the pullback technique. So what else about that post-entry candle was telling us that maybe bears aren't as strong as we would have anticipated or would have wanted? Yeah, the decreasing volume, exactly, right? So decreasing volume, plus we're not able to sustain and separate away from that 400, kind of makes you a bit worried, right? That, hey, my bearish thesis is at a spot where it's too easy for it to get reversed. So just take the win, reset, and then if it breaks down here again, right, we can look for that separation back under 400. Make sense? So instead of having to deal with the mental capital of it retesting 421 and then breaking down, I can just sit it out, wait, right? Give my dog a quick little belly rub, make sure everything, life is good. And then try, right, on a next candle breakdown if something sets up. We have to be honest with ourselves, right? When we see ideas go in our favor, pull back towards our entry price, and then break down, our understanding, right, is that we probably would have made a mistake once that mental capital drains, right? So a lot of the point about trying to lose as small as possible and closing my trades as my P&L is increasing, or near it's increasing, I didn't do quite a perfect job on that one there, is it protects my mental capital, right? And when I protect my mental capital, my ability to look at price action logically instead of from like a P&L perspective dramatically improves, right? So I'm basically delaying that short-term gratification and saying, hey, let me save some of that, I don't know, knowledge, right? Whatever you want to call it, so that I can take advantage of the next trade. I don't need to go mentally all in on this position when maybe I'm most likely to compound the mistakes once I decide to make that decision. Nice work, Michael. Good job, team. Well done, Eric. 2 for 2. Great day. And a good decision, I think. I think objectively a pretty good decision. So 2 for 4 here today. Minus 47.26 on the first one. Minus 295 on the second. Plus 183 on the third trade. And then plus $520, right, on that fourth trade. It's okay, not nearly as big of a day as I had yesterday. That's fine. Market hasn't really cooperated as much, right, as it did yesterday. So I'm not swinging for that big home run. I'm just trying to trade the plan in front of me. Trying to be calm, cool, collected. Calm and cool, probably I'm not, but collected I am. It was like that meme, right? Be a chill guy. I don't know if I've got chill guy energy. Cheers, yeah. Look, I've said this before, and I'll say this again. There's a reason why I am a trader and not why I'm like an accountant or a salesperson or even a lawyer. Sounds good, David. Enjoy the rest of your day, man. I would not function in any other capacity besides this one. So we still have a potential setup opportunity around this 400, which is why I'm still kind of sitting around here. But getting to a point where I'm probably not super motivated to do a ton more here today. Right, a nice green day. It's miserably cold outside. I don't need to go cold on the P&L too. And yeah, again, right, good evidence here today of how win rate is kind of irrelevant. If you focus on controlling the size of your losers, you can make money flipping a coin, right? Now, obviously, I'd love to be green on every single one of my trades, but that's not going to happen. At least not in this life. So, I gotta do the next best thing and manage my losers like an absolute lunatic. I've said it before. It's one of my favorite lines. But I want to be the Richard Rodriguez of risk management, right? I want to be an absolute risk management psychopath and just be stalking my losing trades and cut them up and leave them on the side of the road instead of getting caught bag holding them and doing something nasty. Yeah, I mean, it looks like it's breaking out on volume. 3 for 3 multiple days in a row. So I get that. I mean, it's going to move how Bitcoin moves, right? So, yeah, go with it. I'm going to be temper, right? Basically what I say there, though, Kyle, because I don't put any energy or focus into crypto. So, I'm kind of talking out the side of my mouth, right? If I am too aggressive in giving really any more feedback than that. So what would we need to see here, right, to have confidence that we're going to get some more downside continuation? What would have to happen? Yeah, ideally, right, hold under 385, right? 50 seconds to go. We're probably unlikely to get that increasing outlier volume. So we want it to hold under basically where price action got stopped before. Which might be a little bit challenging to do. We have increasing volume here now. $11.36. I don't know if I necessarily need to see outlier volume here. Pretty decent. So again, we're going to go back to setting this thing up, right? Targeting low of day. So something like this. And we don't want it pulling back too much, because it's already a relatively tight move, right? Yeah, I don't know if I would like that. I'm going to say no. I don't like this pullback. So screw it. I'll take my green day and just go enjoy my life. Any questions here, team? Whoops. Yeah, I'll try to be a little bit more detailed with those explanations here, team. Gonna be making, I mean, I'll talk about it at some point here, but gonna be making a few changes to the 101 call process in the next little bit. Yeah, I'll try to do more of that, Norm, and I'll try to make it more obvious what I'm looking for like entries and stuff like that. But yeah, one thing that I've been, and I'll just say this before we leave, a lot of the one-on-one calls that I've been getting booked recently have been calls that could be emails, right? Or calls that could be messages, or calls that could be a Discord message, right? So like booking a call to ask me how, like to walk you through the FAQ section, or to, how do I set up a Trade Evade account at a prop firm? Those aren't things that are a very good use of either of our time. And so I want to avoid those types of calls because I find them to be very mentally draining when I am, basically being like your Google search, right? So my job is for those calls to be based around helping you improve the technical elements of your trading, helping you identify better patterns in your trading, and walking you through that process. I am not someone who is particularly patient with like tech savvy stuff or where that is my like area of expertise, and doing 5 or 6 calls a day where I'm acting as like a Geek Squad tech support is something that I thoroughly do not enjoy doing, and going to apply more filters to ensure that that is not the case. Now, that doesn't mean that I don't want people to book calls. I absolutely do, but we're going to apply a different filter so that more of them, the questions that can be answered with just a simple DM message are being answered with a simple DM message, and the calls that are specific about actually helping you get better as a trader are getting you better as a trader. So we'll set that up here in the next little bit, but figured I'd give you guys a little bit of a heads up about those changes. Really just wanted to be transparent. Those drain my mental capital quite significantly, and I don't want to be spending my time doing those things, or being your Google search engine, or answering questions that I have to Google for you. That for me is just disrespectful, to be honest. Disrespectful of my time, disrespectful of your time, and disrespectful of the other people who might be interested in doing these calls. So we'll make those changes here today, and that'll be the case going forward. We'll focus on that. So hopefully that's fair to everyone. But something that I figured I needed to say and share, and for people just to understand why I'm making those changes. Understood? Well, I trade the morning momentum styles. I look for those opportunities. I don't feel like I need to chase this price action or chase this. Okay, I missed it. No worries. Not the end of the world. There's no like FOMO or anything along those lines. I'm not trying to catch every move. I'm trying to catch my moves, right? So, no worries. Trades are like a bus. If you miss one, there's always going to be one coming in 10 minutes. All right, guys. Any other questions here? Final call for questions. Final call for questions. That's annoying. All right, team. Well, if no further questions, I'm going to kill the stream here for the day. Same deal like always, right? If you have any questions, hit me up outside the market hours, and I'll do my best to get back to you as soon as I can. Otherwise, have yourselves a great one, team, and we'll talk soon.